It's Mark Eitel here. I run the Mr. Mortgage team, but I also host the Mr. Mortgage show. And I touched on a topic last week about keeping everything in perspective and focusing more on the budget rather than the interest rate when you're looking at properties. Because as we all know, interest rates have moved up over the last couple months. And I had a super interesting conversation with a client today that I wanted to share. It's a young couple and they're looking at purchasing a home in the Port St. Lucie area. And they've been looking for the last several months and they're starting to get discouraged. And I talked to him today and he said he thought that he was just going to put everything on hold. The interest rates are scaring him and he's going to wait to see what happens. Well, I don't know how many people ever did well in real estate by waiting. So I certainly understand all of his concerns. It's been a super frustrating experience for him over the last several months in this housing market. But I have a chart up here on this other screen, and I wanted to share the conversation I had with him. So there's a website called Zumper, and Zumper has all of the rental properties, average rents for all of the areas. And while we were talking, I popped up Port St. Lucie and was looking at similar properties as far as rentals were concerned. He was looking at a 3-bedroom, 2-bath with a garage. So the rentals ranged wildly from $2,500 to well over $4,000 a month. And I stopped looking at $4,000 because it became irrelevant at that point. But where I'm going with this is that he's currently paying about $2,500 a month for rent. And the houses that he likes, the rentals are closer to $3,000. So I did some math and I have the exact interest rate of today. And I'm not going to share that rate because they're moving every day, but this is the current rate for today for an FHA loan, a $350,000 purchase with 3.5% down payment. So principal, interest, taxes, insurance, and there is mortgage insurance on an FHA loan, all in on this $350,000 house that he likes is $2,428. So let's call it $2,500 a month. It's $500 a month less than the comparable rents on the properties that he likes. So we talked through all the pros and cons of still trying to find a deal in this market that makes sense for him. And with this information, I think it made sense for him. So they're going to go out this weekend and continue to shop. And I guess that's where I'm going with all this. The rate is less important, if you will, as the rate is less important than the budget. So they're spending between $2,500 and $3,000 a month to rent. They qualify for a mortgage on a comparable property, and they're going to be able to buy a house for $350,000 with an FHA loan for $2,400. Well, let's call it $2,500 a month. So with that information, he kind of exhaled and saw the value in still moving forward. And I'm not saying it's the right time for everybody, but if you're qualified and you're able to make a purchase, I would get less concerned with the rate. Certainly you're entitled to the best rate that you can get, no questions about it. But where I'm going with this is the rates of last year are gone. This is the environment that we currently live in. This isn't the environment that we're shopping in. And the reality is property values still have all indications that they're going to go up. And my personal belief is they're going to pull back and we're going to have a much flatter appreciation cycle. I don't see any near-term crash, if you will, but I do see some leveling. And even in a leveling environment, it still makes sense. So I might talk about that on the show this week. This just gave me an idea. I'll pull the data for all of the recessions since World War II and what property values did during those recessions. I know because I already looked at this many times over the last 12 months as, we're most likely going into that. There's no sense in sugarcoating it. We are going into a recession. But the good news is that real estate does pretty well during recessions historically. So I might share that on the show this week because I think that'll be helpful. So anyway, I hope that makes sense. Keep everything in perspective. Rates are still historically low, and I know that doesn't help when you're frustrated and you're out there trying to buy. But look at your budget, because the reality is the rates are always going to change, and we don't control the rates. But we do control our decisions. So if it makes sense at, 3%, it likely makes sense at, 4 or 5%. So I just throw that out there. I want everybody to stay encouraged. If you have any questions, give me a shout. I'm always here and happy to help. And if you have a chance, listen to the Mr. Mortgage Show, Saturdays at 9 a.m. on all of the, on the iHeart app, and then on WJNO 1290. And on 95.5 FM HD, or you can catch us on all the podcast networks. I'll put the link under this video. So that's it. Just a quick thought on a Thursday. So hope you're having a great day. And again, if you have any questions, let's talk. Thanks.